Welcome back. Some of the rally has fizzled out. The Nifty's lost about 75 points from the top of the trading session, still holding up firmly in the green, up about 0.5%, but some of the gains have been shaved off in the last 10 minutes. Profit booking is coming through on IT names. So Infosys is under pressure. Tech Mahindra is losing some ground. FMCG names are also weak in trade. So Asian Paints is now dipped into the red. Sharp slide in the last 10-15 minutes of trade. HUL has been struggling since morning and it's now down close to about 1.5%. Let's find out the outlook for the markets. Nilesh Shetty of Quantum Advisors now joins in to discuss the way forward. Nilesh, morning, and thanks so much for joining in. What's the sense that you're getting about the rural markets? Because on one hand, the business updates from Marico, GCPL seem to paint a picture that the rural markets are under stress. But on the other hand, NBFCs or banks which cater to the rural segment, like an M&M Financial's business update was very strong in terms of disbursements, advances. So that's telling us that there is money over there. So can you tell us what is it that you've gauged on the rural market side and what are the implications as we enter the earnings season?
Yeah, at least whatever companies that we have spoken to, sort of very positive of what is happening in rural India, including some of the names that you mentioned. Tractor sales, especially after wheat prices went up, were very robust and actually surprised on the upside, despite the assumption that it was going to be a weak year for tractor sales. And most of the companies that we speak to, given that it's been an above normal monsoon, by and large, farm prices are much higher this year. The assumption is that it will be a very good year for rural sales for most companies. So at least our view remains that it will be a good year. We are very surprised on some of the branded names and the company that has recently come through. But it could be a function of down trading in an inflationary environment, not necessarily sales overall getting impacted.
Okay, Nilesh, good morning and thanks for joining us. This is Pavitra. The other space I want to ask you about is the IT sector. Of course, the earnings start next week. We've seen the kind of cuts that have come through this year. It's been a near 30% fall on the index itself. Do you think there's a lot more pain left in this space?
The companies that we speak to on the ground suggest so far there has been no cutback from any of the clients on IT spends. I know the market has been very, very worried about US recession and the impact for the sector. But none of the companies on the ground have suggested there has been any client pullback on any projects or any cut in the spends as of now. But I assume at some point it will start creeping into the numbers. That is already in the valuations. And you look across most IT companies, they are down from in the region of 30 to 50% if you go deeper down in the mid-cap IT space. So our sense is a lot of the negativity is already in the price and things may not be as bad as what the market believes it to be. So for us, it's actually been an entry point or to add more into the names that we already have, given the correction that has happened over the last 6 months.
Okay. Hi, Nilesh. Morning. As we sort of head into the festive season, or rather we're already in the midst of it, what are the kind of stocks or sectors that you would keep your eye on as, we have this end of the year, and etc. What is looking favorable right now?
So we have a very large overweight on the two-wheeler space. Even today, two-wheeler volumes are less than what they were doing a decade ago. There are many reasons for that, including sort of cost push and a lot of the sort of end consumer demand drivers, including say IT companies, are still in a hybrid mode. But our sense is if there is some sort of uptick in the festive season, given where valuations are in that sector, I expect them to be re-rated very quickly. At least that is where we think. By and large, again, the festive season is expected to be very robust this year for most companies, given that last by different waves of COVID. So at least we think broadly most sectors will do well. And within that, at least we have a large weight in the two-wheeler space, given that there is a big scope for volumes to get related.
But two-wheelers like Bajaj Auto and TVS Motors, exports have been under pressure, right? I think for the month gone by, Bajaj Auto's exports were down 33%. TVS Motors export sales declined by 9.2%. Isn't that an overhang? And which would be the two-wheelers then you would bet on?
Yeah, for specific names, yeah, because exports have actually been very, very robust for them. On that high base, you might have some seasonal volatility. But the domestic numbers still remain weak across for most companies. They are far below their peak volumes. So once the domestic volumes pick up, I expect all the companies to get re-rated actually.
Okay, Nilesh, overall tell us, if someone wants to put in fresh money into this market, what are the sectors, the spaces where you think that, there's a better chance of outperformance? Financials have been a favorite for a while, so do you think that space still stands out?
Broadly, post the COVID rally, two sectors have materially underperformed. One is the consumer discretionary space, primarily sort of the automotive and the two-wheeler space, and the second is the financial space, and a lot of it private sector banks, which have underperformed the rally. And we expect at some point, given that credit growth is picking up and consumer demand is coming back, both of these sectors will start doing well. So at least for us, we have large overweights in both these buckets as of now.
Is there a risk of downgrades in the FMCG sector? As we started off the discussion, the earnings update from Marico and GCPL were fairly subdued. Is there a risk of any sort of downgrades? Is that something that the street is talking about or investors are concerned about?
Yeah, for us, I mean, we are a value investors, though. The portfolio is run in the value side. Unfortunately, most of the consumer staple names have always been very, very expensive. And if you look at sort of India's history, so from 2015 to 2020, in a very low growth GDP environment, even though these companies were growing at a slower rate than their history, these companies got re-rated quite dramatically in price to earnings multiple. Given the expectations that are built in terms of valuations, I think they may disappoint on the actual delivery because other sectors have caught up in terms of growth. So investors will start asking questions, given the growth advantage is not that great being parked in this sector, what is the reason they're trading at 50, 60 times earnings? So you might see some reallocation from the end investors. That may happen. But again, it's a fantastic long-term story. Investors who want to stay allocated for the next 10, 20 years, they have a very simple consumer story to get allocated to, and they may continue to prefer allocating to consumer staples.
Nilesh, just one last question that I'll ask you is on the real estate space. I mean, we've been talking about the solid demand. We've seen prices go up in this space. And this is normally sort of a cycle that, spans a longer time period. So do you think it's a good place to go stock picking?
Yeah, surprisingly, despite the interest rate hikes, when we looked at data in September as well, there has been no slowdown on the real estate side. They continue to remain very, very strong. And our sense is you will have transactions picking up over the next 3-4 years or remaining strong. I don't know how much pricing will go up because most of the developers tried to focus on the luxury segment, which did not do that well. So they are now focusing on the affordable and sort of the mid-market segment. So you will have a pickup in transactions, not so much maybe a pickup in pricing, but we expect real estate cycle to last for the next 4-5 years, which again is a primary driver for economic activity. The question is, can you play that through the listed entities? So there are 1 or 2 quality names which trade at significant premiums. But once you go below them, there is a big question on corporate governance in some of these names. So real estate has been one of those great macro stories for India. But if you try to buy companies to play that theme, it's not worked out well for investors. So at least we've never had any allocation to the real estate space in the portfolio.
Do you like any of the REITs, Nilesh?
No, we are pure sort of equity investors. We don't have REITs in our portfolio.
All right, got that. Nilesh, thanks a lot for joining us and taking us through your call on all of these individual sectors that we asked you about. With that, we're going to get into a short break on the show now. But before we do that, here's some great news for investors. You can now track US market action real time on Money Control. So log on to the Money Control website or app and stay informed about all that matters in global markets.